Welcome back to the channel. Today we are looking at Exela Technologies, and the stock is down 4.24%, trading at 30 cents today. Volume is healthy. We have it at already 3 million shares that have exchanged hands, compared to an average volume of 33 million. The thing I want to point out today is, if you look at the bottom right of your screen, you will find out that you have the performance outlook, and for the various firms that are giving coverage to Exela Technologies, you can see that overwhelmingly, short and mid-term, they are all bullish, and for the long term they are neutral. So I would say that it might be a good time to take a second look at Exela Technologies and consider investing in the company if you are so inclined. So right now we are still quite close to the 52-week lows. 52-week lows was 26 cents, and 52-week high $5.45, and today we are trading at about 30 cents, so not too far from the 52-week low. I believe that might be one of the catalysts to the high volume we are seeing so far. We are barely, I would say, 2 hours into today's trading session, and already we can see that there's a healthy volume of 3.6 million, and a typical trading day would be about 33.9 million shares. So a very active trading, and the stock has moved up and down a couple of times. But if we look at the 5-day trend, you guys can see for yourself on the graph, it is totally in the green. So it means that the stock is having some kind of momentum. And if you step back and look at the broader picture, the economy is in the doldrums right now. Things are very uncertain. There's very high inflation. You have opinion leaders who cannot agree on the path forward, and you have the Feds who are saying openly that they will increase interest rates until this inflation is brought under control. So what that means is that there's going to be a liquidity crisis. It won't be so easy to get access to cash, and because of that, things will certainly slow down a little bit, and then prices will return to a more normal level. It's been a very hard couple of months. People, especially those with kids, are having a hard time getting baby formula. The price of gas is off the charts, and people are scrambling for electric vehicles, which the manufacturers cannot produce enough because of the global logistics crisis. So they can't get the raw materials. Some factories in countries where these battery packs are produced are having shutdowns, especially I'm thinking of places like Shanghai in China. And so it's just been a very, very tumultuous past 6 months to 1 year. And I believe the authorities are doing their best to pick up the ends and get things going back in the right direction. But until then, just be prepared to face a lot of volatility in the stock market. And where there's volatility, that's also a good time to reevaluate your portfolio and make investments that will yield lots and lots of returns once the market starts returning to normal. So that's what I had to share with you guys today, and I hope you guys are doing your investments wisely, doing some due diligence. Hopefully you get some good and very nice returns on your investments when things turn around. Thanks for joining me. I will catch you guys on the next one. Don't forget to hit the thumbs up button, subscribe to the channel. Bye for now.